As the market pops up on 25th April 2020, a rose is a rose. A default is a default. Sri Lanka chose to default and has triggered a rating downgrade to C. Actually, the downgrade should have preceded the default, but that is how the rating mechanism works. Greece has recovered to BB subsequent to a default not long back. The US is getting reaffirmed at AAA. Why mention US now and a reaffirmation? Has there been a US default? In 1971, when President Nixon went back on his promise to buy dollars, $35 to be precise, and sell 1 troy ounce of gold under the gold standards, was it not a default? Maybe it also matters who is the default. Today, the dollar index is slowly climbing to 101. Brent crude has softened to 106. Gold was wobbling about 1,900, and early morning trades on Friday, it is at $1,935 an ounce. And mind you, Nixon went back on his promise to sell 1 ounce at $35, which was in force from 1944. But in 1971, I would say it was a US default. The Nasdaq has shed more than 5% during the week, and Friday morning it is again losing close to 1%. The benchmark 10-year bond yield is inching closer to 3%. Rupee closed at 76.42 against the dollar. And with FIIs continuing to pull out from equity markets, this month cumulatively they have taken out closer to 30. The coming week could see rupee testing even beyond 76. The dollar reserves of RBI have again dropped to 603 billion. But perhaps the dollar intervention by RBI, a direct selling, is aiding their cause of draining out liquidity. In the stock markets, Nifty lost 1.76% week over week, and options volatility was steady at 18.35%. An index-heavy stock, the Bajaj Finance Limited, has lost more than 5%. A price action, reversal in price action, can be expected in the Indian 10-year benchmark bond yield has clawed back by 8 basis points subsequent to last week's devolvement at 7.24%. The 3-year interest rate swap points were also high at 6.22%. Today evening, the Reserve Bank has released the minutes of the Monetary Policy Committee. What is striking out is the uniform demand by all the committee members for focusing on withdrawal of accommodation. And one of the members, Professor Jayant Verma, has been more acerbic not to articulate on the accommodative stance, but even empower RBI with mid-policy action should a situation demand. So are we in for demanding times? Have an interesting week ahead.